S. Naren joins us now, Executive Director and CEO with ICICI Prudential AMC. Naren, fantastic to have you back. Thank you for joining us. The fact that you are on our show is making you happy, or the NAV in the market is making you happy and smile so much?
It's I mean, when you're close to all-time high and, the fact that investors with ICICI Prudential have made good money over the years does make you happy. So there is no, why should you feel unhappy about it?
Everybody is happy. Is the reason to get slightly worried about the market setup, the macros and the valuations? Do you think the market run-up has been too fast, too quick and too swift?
See, luckily we have a lot of stock, which means that the incremental investors are much smaller than the amount of stock of money that we have. Uh, What happened in the last 6 months was that the macro of India improved very significantly. And last year, same time, we used to worry about crude oil, we used to worry about current account deficit, we used to worry about inflation. I mean, today we don't worry about any of these things. We worry only about valuations, valuations, and valuations. So I think there is room to worry. And the fact is that incremental investors have to worry. But what about people who have been invested with us over the years? They have less to worry because they made good money. And there is nothing at this point of time which says that they have to take away the money and redeem the money. That's not what the market is suggesting. But people who have to invest incrementally, they have to be a bit more worried rather than the people who have invested over the years.
Right. So, Naren, that brings me to my next question. What is looking like the overvalued pocket or pockets in the market right now? And because, temperamentally you've been a contra investor, what's looking undervalued, if there's anything?
Actually, if you look at it at this point of time, there are very few pockets where there is undervaluation or there is fear. And that is the challenge at this point of time for us as investors, because the few areas where you can see that returns are negative or fairly muted at this point of time is technology, where the numbers are coming bad. So that is an area where I believe gradual investment over a period of time should work well, because you can see that there is very low growth being seen in the sector over the last few quarters and maybe over the next few quarters as well. So that is one area where you can see that there is a challenge of growth, and therefore the valuations are continuously dipping. The other areas where you're seeing clearly bad numbers at this point of time are sectors like chemicals. And but there, if you see, the valuations have been so high and very, very high over the years that what has happened is only some level of correction in the recent past. So have we reached the bottom is something, we were actually zero in some of these sector, in a sector like chemical, in many of the sector stocks. So we are still evaluating, have we reached a situation where the sector requires investment, is something we are thinking about. These are some of the few sectors, at least, where you've seen a fair amount of negative news flow. But otherwise, the rest of the sectors are all seeing very positive news flow. And so there is no scope for contrarian buying. The challenge of contrarian selling is India is the best country in the world to invest at this point of time. And while we may think that India is the only country which has done well, you go and look at what's happened to Taiwan, look at what's happened to Japan, what's happened to Korea, what's happened to NASDAQ. You can even look at what's happened to Europe. You'll find that all the countries in the world have delivered huge equity returns in the recent past. So it is not as if India is the only market which has done well. Many of these markets have done well in the recent past. And so it is tough to actually make a call that India is the only performing market at this point of time. So it's a bit challenging from an investor perspective, what to do if you were to take out money, because there are no contrarian opportunities. And if you take out money, that's why I think the biggest challenges is for the new investor, because I think the old investor has to just stay invested.
Naren, hi, morning. Nikunj always says that you need to be lazy and choosy when it comes to the large caps and don't go really wild in the mid caps. But given, the kind of move that we've seen, am I saying it correctly, Nikunj?
Yep.
Yeah, okay. So what would be your outlook as to how one should be approaching, the broader markets, mid and small caps?
See, the biggest challenge in mid cap and small cap is see, when you have one redemption cycle or some kind of a redemption cycle, what happens is some of the froth goes away. And what happened in large caps was because there was a redemption cycle led by the FIIs in 2021 and 22, the froth went away in large caps. And therefore, all the excesses got corrected. In mid caps and small caps, due to the very effective work done by the mutual fund industry in SIPs, there was no net redemption in mid caps and small caps at all over many years. So froth has just not gone away at all. So what happens is there is possibly froth in some of the companies. There could be good companies, there could be companies with froth. And that is a challenge when investors are investing in mid cap and small cap. It is only when you have 2, 3 months of redemptions in mid cap and small cap, you will know actually whether there is some froth in some of these stocks and whether that has happened. The last time the froth was removed was in 2008, February, March, April. So you're really far away from a redemption cycle in small and mid caps. So, and that is the challenge of investing right now in the small and mid caps at this point of time. So many of the stocks have never seen redemptions, and so there has not been any selling. So stocks move from 30p to 40p to 50p. So that is a challenge. Whereas in large caps, you saw that 2 lakh crores of redemptions by FIs, which are primarily concentrated in large caps. So what happened was the froth did go away, and you saw many of the new age companies correct under 50%, many of the large caps also correct. So that kind of froth did go away for a period of time, and that ensured, you had much more margin of safety in large caps.
So, Naren, banks are a consensus call, but is that the best sector to be in? I mean, it may not be contra, but sometimes you don't have to be contra, you just have to be with the obvious big trend.
Certainly, you should have financials. When you are liking an economy, you should have financials. And that is the thing. But, when you are invested in large caps funds or flexi cap funds, you have a good amount of banks. And that is at this point of time, banks, we did some analysis over the last 10 years and we found that banks are the only sector which did not get where valuations haven't gone up. Whereas if you look at most of the other sectors in India, what we found was over a 10-year period, valuations have gone up by 30 to 40%. That the price to earnings multiples of most of the other sectors in India have gone up by 30 to 40%. So that from that point of view, valuations are attractive. The challenges in banks is that you have to remember it's a leverage sector. So it is not a sector which has low debt to equity. So you have to remember that if mistakes happen on the part of any financial services leveraged company, it hurts the equity holder much. And Warren Buffett always says that, when you're investing in financials, you have to be always careful of the quality. And you have to look at whether the company which you're investing in financials is conscious of how they take credit decisions and how they act in the markets. And that is something he has always believed in, that you cannot do contrarian investing in financials and say, I'll bet on somebody who's taking all the risks in financials. And that is how he says it. And that is true always in financials. In financials, betting on quality always works. And even though, we are deemed to be contrarian in the 2016 to 18 cycle, considering that we were managing other people's money, We did not take credit risks beyond a level, and therefore we did not have credit challenges. And we did not bet on many of the NBFCs or the riskier private banks at that point of time, because we felt that there is no point in being contrarian in a leveraged sector like financials. So we still think you have to be, financials are a good sector, but there is no point in taking very big risks in financials.
What should one do in this market if somebody is looking at investing the way you invest? Because barring IT, nothing is cheap, nothing is attractive. And with IT also, Naren, we don't know what AI actually will frankly do.
That part of it is true. That is why I said it's much easier for you to, be invested in hybrid funds, invest in hybrid funds rather than take big bets at this point of time and say that at all-time high, take a big call on equities at this point of time. And that is a challenge at this point of time. That's why I said for all the older investors, it's a very, very easy time to just stay invested because you're sitting and making huge sums of money on your older investments. But it's a very tough time on what to do with new money. And it's not an easy job right now because other than Chinese equity markets, there is no other contrarian equity market anywhere in the world at this point of time. And China has huge structural challenges because of the huge debt level there.
Naren, a lot of mutual funds have stopped accepting lump sum in small cap stocks. Would you be considering something on those lines? Do you see that we've reached that level in small cap stocks?
I mean, it's something that, I think it's something that, our small cap fund is 6,000 crores and, the other, clearly small caps are not cheap at this point of time and neither is mid cap at this point of time. And the flows that we have been getting in our small cap funds are really small. So that is the reason why we have not yet done it. But clearly, I don't think small caps are at this point of time something very cheap, or it is possibly one of the costliest places in the market at this point of time. And the quantum in terms of our framework, I would say, is considering the huge flows which have been coming into small caps, it is a sign that there is a little bit of more euphoria in small cap and mid cap than it is there in large caps.
Okay, thanks so much for taking time out and sharing with us your outlook on the markets.